kingdom there'll be no end. To his kingdom there'll be no end. To his kingdom there'll be no end. Okay. Good morning, everyone. It is currently the afternoon, being 12:30. So the New York Kill Zone has opened. The New York, what do you call it? New York Open is in an hour. So the reason why I started streaming, I've been monitoring the markets just like ever so slightly, is because we've taken out some London's low on the GU, right? So London's low during the Kill Zone, we've taken that out. We've also taken out Asia's low. So we've taken out Asia's low, taken out London's low. So there's a lot of liquidity that we are taking right now. You can see we've also taken some displacement. So before that, I want to go over what we did yesterday. So we actually took this trade where we, if you zoom in a little bit, let me even show you from Telegram first so you can see. So I am meant to be trading on a demo account, but you know me by now, I prefer live accounts for practice. So I do have a small amount invested just so I can learn quicker, or better rather. So this is GU. What did we have? So we had New York Kill Zone opened. We took out London's high. I was expecting from this low right here, we could have entered on this touch, by the way, but that's another point. We kind of got in on a continuation idea. So our target was this weekly fair value gap right here. We are bullish for the day, which lined up with DXY pullback because we're bullish for bullish for the pound, bearish for the dollar. DXY was going down, or rather, it could have gone down to the fair value gap that we have on the DXY, and then on the weekly fair time frame for the pair GU, we have a fair value gap above. We've taken out major external liquidity on the sell side for GU on the daily and the weekly. So we have reached our targets. And normally when you take that liquidity, price moves in the opposite direction. There isn't really any other clear kind of close areas of imbalance or liquidity on the sell side of things, but there is some on the buy side of things. So we have both buy side liquidity and of course fair value gap. So that's why we are bullish. So this idea here was within the silver bullet window, which is between 10 and 11 o'clock in the morning for the New York time frame. So we entered in on a retest, but let's just break it down. So on the 5 minute, I believe this is the 5, or this is 3 minute, but on the smaller time frame between 1 minute and 5 minutes, what I use, so 1, 3, and 5, you see that we take out liquidity down here. So we take out these lows, we take out all of these lows. Right, remember, we're bullish. So anytime we take liquidity on the sell side, we need to be anticipating a move to the upside. Now, that alone is not enough. Remember, it's a sweep, displace, retracement. Those are the three things I look for. So we swept the lows, then we displaced upwards. On the smaller time frame, you can see this is a market short shift. So this square that we've drawn out on the 1 minute time frame is a fair value gap. So when price came up and came back down to it, I was willing to enter on a buy because of the fact that we are bullish. We have a bullish bias, and we've also confirmed this liquidity sweep with a displacement. So retracing to that displacement, you can also, if you were to draw a Fibonacci from this to this is around about the equilibrium, probably below it. And of course, we're buying to our target with the anticipation of closing near the end of the day, because with the power of 3, the high in the sense of a bullish day, the high of the day is close to the close of the day. Not always, but that's just the general rule of thumb. So it closed around 7 p.m. GMT. And you can see here we closed for a 3.5 RR. It went up a little bit, came back down, closed quite nicely. I just tapped it so you can see the risk reward ratio. So that was on my phone because I was outside my house, so I wasn't able to obviously close it properly. I think I closed it at 9 actually. I don't even know exactly. I'll have to double check. So that's the idea of this trade right here. And I'll show you what I mean by the fair value gap on the smaller time frame. So if I go to the 1 minute and zoom out, I can show you. You can see here from this candlestick to this candlestick right here, there's a fair value gap here. Place of inefficiency, price came back down, filled it completely. We got in around about here only because of spread, but our target was, of course, to get in on the touch. And with spread, obviously, it took us there. This is also the order book, so I was willing for price to come back down shortly and then enter in a compound trade. And this is the New York kill zone. You can see that we took out this liquidity down here. I'll just show you the liquidity I was talking about earlier. We took out all of these lows. You can see we dipped below it. And even this ultimate low, we came below that too. Right, so that's the liquidity sweep. We took out all this liquidity as well. And then we continued. And we closed back here. And you can see we're closing at the end of the day. What happens? The higher the day is close to the end of the day. Doesn't always mean that it will happen at the same time. Doesn't always, it could have the high over here and it could close way down here. It may not always be the case, but that is what we believe. So we closed it near the end of the day, and you can see price with spreads in the market around 5 p.m., which is when the markets close. You see this kind of spread of liquidity, or spreads rather, not liquidity. So Asia session happens, comes up here, some imbalance here, we fill it, we then come back down, we deliver downwards, we create the low of the day, the Asia's low gets taken out, and then London begins. London takes it higher, takes out buy side, comes up to this area here, then we then deliver to the downside. Okay, back, creating this low, taking out this low here, come back up, consolidate, New York opens, takes it down, takes out this liquidity, and we take it below, just below this London kill zone right here too. So that's currently the state of things. So the reason why I'm even streaming is purely because of that idea that I saw price taking out this right here. So I wanted to see. So let me get rid of all of this. Just really declutter the chart. So okay, so on the weekly time frame, I'm expecting some bullishness, and this is not yet a swing low because on the weekly time frame, because though we have a higher low to the left of it, we don't have a higher low to the right of it, but we are anticipating a higher low to the right of it. So we're anticipating bullishness for this week. Why are we expecting some bullishness? Well, we've taken out this liquidity. The next area of liquidity on the weekly time frame is technically here. This is the swing low. This is a low, yes, but this is the swing low right here. So there's going to be more liquidity over here than there is here, for example. We could take partials here. You can have us, obviously being a weekly time frame, we can actually have a target here. That's fine, but the overall target will be this swing low right here. So if price was to choose which area of liquidity was to go for, you have this swing high over here, you have this swing low over here, but you also have this imbalance, a daily fair value gap, but we have this weekly fair value gap here. So this weekly fair value gap is closer than this swing low. So the fact that we're closer here, this magnetic pull of this imbalance area, because price moves to two things, imbalances liquidity. Because this one is closer to price, I'm expecting price to go here first. Not that it won't go to either or, it could consolidate, but our anticipation is for this to be bullish. We have the taking of this liquidity or reaching off the target one, and then of course the imbalances that we've created in moving of taking of this liquidity. So that's why I'm expecting this week to be bullish. Now, with the daily time frame, we need to see where we are in the grand scheme of that bullishness. So we're bullish up until this point. We didn't reach it yesterday. We came close, but we didn't reach it. So we're having a natural and a retracement. I think this is a part of price moving towards the upside. Now, good thing about our model is that our entry model kind of allows us to confirm if this bullish idea is correct. So we may be bullish, but the entry model doesn't get triggered. Two things can happen. That means that sometimes we do miss out on trades, even though we know where price is going. Other times it means that we are currently, if we got the bearish, bullish direction or the bias direction wrong, we are protected by our entry model because our entry model only is a confirmation. There's going to be some times where we get the odd signal to enter with the bias that we've predicted and it's wrong. But that can be rare because there's so many filters it has to get through. So many things has to go wrong for that to be wrong. And so because that's unlikely, why is it unlikely? Because of skill set, because of back testing, and all of those reasons is why it's unlikely. So what I'm currently expecting on the daily time frame is that we have a small retracement, but I'm expecting to be bullish. I'm just gonna be bullish. It's just simplify it. I'm very bullish. It is in a weird area right now, but once we get here, we'll get more clarity. So we'll get into other pairs later. Let's just focus on this because when it comes to GU and EU, GU is currently more bullish. So if I'm looking for sells, I'll be on EU. If I'm looking for buys, I'll be on GU. Just for this season at least. I'm not sure if I can say that for certainty long term, but the reason why I'm saying that for short term is because when we had it as divergence, for example, where price was bearish, but the GU created a higher high, but EU created a lower high, and both of them ended up having the market structure shift. And even after the market structure shift, the displacement, EU had the bigger move pip wise, also looked a lot better for bearish structure wise, bearishness structure wise. GU has been better for the buys. Right, so this is the hourly. So you can see here we kind of not had a shift, but we are pulling back quite deeply. Now, I like this one indicator. Let me see if I can find it. I kind of like it. Shows you the daily candle always. The recents. This is the most popular one. How? Okay, just marks up like key ideas. Actually, not bad to be fair. It's this one, but yeah, this is it. So you can see the open, the manipulation here, the distribution. You can see where we are right now. So currently taking out Asia low, London low. It's very, 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 very bearish. Obviously, you can see here it just shows you the daily candle, but it maps it to multiple time frames, so you can always have it as a reference point. So let me get rid of it. I like to look at it sometimes. So I'm bullish, like I said, but we would obviously understand that we are currently bearish structure wise. So for me to be bullish now, what we'll be looking for is a market structure shift to the upside, breaking structure, and then confirming it with a displacement. And then, of course, we'll then enter on the retracement. So I'm going to come back to that later. So on the daily time frame, it's important to note where we're at. So we were expecting price to move down into this area, which is this fair value gap here on the weekly, and then head over to this swing high, which is an intermediate term high, which is a high that we shouldn't expect to get broken if we are bearish. So we are bullish. Breaking that, we just confirm it. It is possible right now that price goes to it. Now, we were, as of yesterday, closer to the weekly fair value gap than we were the swing high, but as of now, we've crossed the midpoint. We're now closer to the swing high. So we might have to pivot into bearishness. So looking at the time frame here, like I said, we're bullish up until this point, and the next target is down here. Currently, if you look at just liquidity alone, the swing high, the next closest swing high is here to here. So we are still closer here. This might just be a bearish day even, and then it'll be bullish tomorrow. Let's see what the information is saying on the calendar. So today is Tuesday, and we have CAD news at 1:30 p.m., which is in just about an hour. Okay, so the weekly on the Euro USD. Let me hide everything. yes, we have the same fair value gap. We've also broken this low right here. I don't know what half of these lines are for. Hold on. So EU is currently within the range. Let me have a look at this. From Asia session, we have come quite low, but within New York, we are within London session right now. So this one's a bit delayed. This one's still a bit undecided as opposed to GU, which seems to be wanting to go deep lower. Now, remember that we're bullish, on the daily time frame. So this could all be a big ploy. Like imagine all of this just being manipulation. It's possible. Let me see DXY. Again, this could be a liquidity grab to go to this weekly fair value up. I think we just got to stick with our original idea and just wait for the opportunity. So I need to get as well London Open. So it's from 8 to 9, right? I need to add that to my calendar so I can just have it accessed quite easily. So it'll be, oh, it did have it. Okay, wait, so it is the, it'll be some 7 to 8 p.m. Every weekday. Okay, I've got all of them added down now. Okay, this is a strong sweep. Okay, so now we've taken out some strong liquidity. So generally speaking, what we're looking for is for price to take out liquidity, right? So liquidity will be a strong area. Like for example, there's here. You just got to look for retail ideas. So things like support and resistance, supply and demand. I like swing lows sometimes. They tend to be quite good. Because here's how it works. When price creates a high, there's going to be people that will enter sells and put their stop loss above here, right? The ones that come in late into this trade, they'll be entering the sell. They're going to set that stop loss here. So when price comes back up to here and then does this again, people see this as extra support. So more people get in, enter sells, and they set their stop loss where? Right here. So what is going to be expected? Well, we expect price or institutions to be looking at this area right here and seeing, okay, this is the area where we want to get liquidity. There's going to be a lot of orders here. So they're going to push price up. And the way they push price up is by pushing it down, like here, to then take out the sellers that are continuing getting in late, and then taking them out to then push price up to take these guys out. So everyone loses their money basically. Right, but not us. Right. Okay, wait. So we've taken out this high. First of all, we swept this liquidity right here, which is interesting because it lines up with this high, which we traded high above, and we are bullish for the day. Okay. From here to here, we have this displacement range. We are then looking for price to come to this optimal trade entry. There's a fair value gap here, and then there's also a fair value gap here, and then of course an order block over here. Okay. So these are three zones. We're expecting price to come back to, well, we should expect price to come to the deepest one, which would be over here. But to get in early, you can get in at low hanging fruit. Set your stop loss to above below here, and then you'll be targeting not just New York kill zone highs. Remember our overall target. Let me zoom out a little bit. It's actually going to be all the way up here. Okay, and if we now zoom back in, be something like this. Now, if we are blessed, we could potentially get in like here. This would be optimal. So we're getting mostly here though, just because we want to get in low hanging fruit and exit low hanging fruit. So we might take partials at the New York kill zone high. Maybe this high over here, which is why, oh, this is the retail idea. Okay, so that's our posture right now. We're going to set a quick alert just so I can go to other pairs and analyze without missing out any big movements. So when there's no kill zone lows or highs, I can use daily, weekly, 4 hour, 2 hour, 1 hour, anything above 1 hour, 1 hour and above of either liquidity or imbalances. When I get those two structure points, it is then I can use price action and the model, entry model on the smaller time frames to then confirm if the reaction or rejection is correct, basically. So this is our idea for our idea for GU. For EU, we have yet to take any liquidity. We are still in the range of London. It's high and low for London's range. So let me just mark that out since that's what is happening right now. And the low, so might as well just take this low right here. So this is the range we are currently in. We want to take out the low and then I'll target the high. Now, because this is lagging behind, it could be that we don't even take out liquidity here. I'll be so real. And that this liquidity sweep is what it is. Now, if we take from London's low to the low of the current status, so London's low to the New York's low, we get this. From here, from London's low, just take this one, to this is a up. So we have a divergence. What's the divergence? This is bullish, bearish. This looks bullish. Now, GU is the one we prefer to enter on buys just because, one, we have the liquidity sweep now. Two, it also is generally stronger in terms of bullishness. And if we take that example from EU, GU and place it onto DXY, we actually have equal highs. Well, to be exact, the high over here is 101.432. Is literally equal, exactly. So we have equal highs here. We didn't take the high, but do we have this redrive pattern? Not really. But the DXY here shows signs of bullishness regardless. So I would be willing to enter this. I don't think I'd risk like a whole load, like anything crazy, but I'm gonna back my idea. So this is GBP USD. Let me my moving slow. It's GU. What's the pips? Like 7 pips. Should say with spreads. And we would willingly risk maybe like double that. So maybe what? Maybe that amount. And EU and yeah, EU is just consolidating here. So this is our idea. Another thing we can look for and wait for is from 10 can start looking for the silver bullet idea. And then that'll be, I have to leave a little bit earlier than I would normally. This is day 100 of our prayers, so it's the finale. And so therefore I will be getting ready and leaving earlier so I can arrive earlier. It's going to have a whole celebration day. That being said, I need to eat. I haven't eaten yet. It's time for me to eat. So I think same thing as yesterday. We're just going to end the stream a little bit early. And then if anything, we'll either restream later again and or post on Telegram. So Telegram link is in the description if you want to join it. Rolex says, bro, I'm proud of you. Don't stop. Thank you, my guy. It's been very tough. I won't lie. Some days it's not been easy, but we're here every day. And we've got 900 more days, my guy. Okay, so this one, right. So this happens a lot of the time where I believe price is going to go up and sometimes it doesn't come back to my entry. But you just got to be patient. The good thing about when price moves higher is, don't forget, this is a price leg, right? This is just us marking off the market structure shift. Now you're wondering why I'm counting this as a market structure shift. Well, if you zoom in into the market, we're on the 1 minute currently. We have a swing high over here. Why is it a swing high? Because the high to the left and the high to the right of it are both lower than what this high is. So this is the swing high right here. Then you also have this being the low of London kills us. So this is an important area. Created a swing high over here. We pull back down, created a low, taking out this liquidity. We then had a market to shift upwards because we see the displacement and the breaking of this swing high. So with those two things put together, we now have a valid potential entry. We've had a sweep, we've had a displacement. Now we need a retracement. Retracement to where? Though below the equilibrium, so that we're in a discount. When we're in discount, price is cheaper, and we want to buy in those areas. When price then reaches this area, which would be the optimal trade entry, which is the 7.9 to the 6.2 level, the price enters that range. When optimal trade entries, we want to find fair value gaps around the area. Being the low hanging fruit, we're aiming for the 6.2, which would be this 1.32191 level, and the stop loss would be below this low because that's the first candlestick contributed to this fair value gap, and that is the low of it. And then we want to add some spread, which will take us to 13213, and so we would be entering here targeting our weekly. It's actually our weekly and daily target, which will be the low hanging fruit of the weekly fair value gap, and then the daily time frame, that is this swing high on this daily time frame right here. And we're bullish for the short term because it's closer than the sell target, which is all the way down here. And we treat imbalances and liquidity as magnets, and the closer you are to a magnet, the stronger it will be to pull price. And since this is closer, we're going to be targeting it. If you also look at the general consensus of the pair, the underlying tone, yes, we're bearish, but one, we've just taken liquidity. When you take liquidity, you tend to aim for liquidity on the opposing side. And two, we should expect a retracement. See what happened here? When we had this big displacement, we had a correction to fill this fair value gap in. Then we displaced downwards again. And if we're expecting that same outcome, we should expect price to fill these zones, which is this daily fair value gap and then this weekly fair value gap right here. So that's why we're bullish, and we're only taking trades in line with that bullishness. And this is what we have so far. EU, like I said, the only difference is it is consolidating. We need it to take a major high. So GU is our option for right now, but we need that retracement before we get in. So we've sent an alert. I'm going to end stream now. I'm going to potentially stream again for New York session. It's a maybe because it depends on what price does. If price just keeps going up, I'm not going to stream. There's nothing to show you. But at the same time, join the Telegram. Link is in the description. It's free. I show you all my trades, update everything. Everything is visible. So that link's in the description. And yeah, I think that's it. It's been your boy CJ Icy. Thank you for everyone tuning in, liking the stream, supporting me. Kind words. I appreciate every single one of you. Day 106, part 1, at the very minimum, complete. And yeah, we go again. We have 900 more days. At the end of the 1,000 days, we're gonna be a millionaire, 100%. So follow along. We're starting from scratch. We're starting from again, from scratch. We're starting all over again. And yeah, it's been a fun ride. See you guys later.